Hello and welcome to a live stream. My name is Trajan. I'm going to talk today about AI, the general market, and how to invest in AI now and in the coming years. I am a former financial planner, Wall Street analyst, and spent many years as a CFO, a chief financial officer at a couple of different companies. And now I run Invincible Money and I write the newsletter called Morning Download. It's a daily newsletter where we cover everything that's happening in the market and apply it to personal finance so we can get smarter every day and know how to best invest our money in the short term and in the long run. Some of the things I'm going to cover here today is based on what I've written in the morning download in the last few days. And I'll keep writing about AI and companies that are doing well in AI and how it's affecting the market in the morning download. So if you want to get access to that, it's free. It's every day. Shows up in your inbox first thing in the morning. Then check this link here, morningdownload.com, and you can go and sign up for free, unsubscribe anytime. So let's start with an update from a few days ago. I want to show this graph that shows the performance of the market year to date. So pretty much this year so far in 2023, what has driven the entire market has been AI stocks. If it wasn't for the AI stocks, particularly NVIDIA, then the market would not be in positive territory. Just last week, we hit 20% return so far this year, which means we're in an official bull market. And all of that, entirety of that is driven by AI stocks. So look at this graph here. You can see at the bottom, the S&P has been doing decent, just the S&P, but what has outperformed, what has driven up the S&P that makes up a good chunk of the S&P are several stocks. NVIDIA, you can see that NVIDIA has taken off. Last week, it hit a $1 trillion value. Yes, that's with a T. Tesla has done well, and we'll talk about Tesla here in a second. And AMD, Advanced Micro Devices, has also done very well, even though they don't make as much money as NVIDIA and are much smaller. And other names, which we'll talk about, like C3 have done well, and a couple of other ones have done well that don't necessarily have any AI products, but they drive the market. So in this discussion, we're going to start at the top level, which is the economy. How's the economy doing? How does AI and technology stock relate to the economy? How you can invest in the economy is one level down through general index funds. And then we'll talk about AI specific index funds and then AI specific companies. So we'll start at the top, go macro, and then go down more toward micro. So there are a couple of things to look at first is where is the economy going in general? There's a lot of debate as to whether or not we're in a recession. Some economists say yes, some say no. More recently, that's trended toward no, that we're not in a recession, that we're going to have a soft landing. Although a couple of analysts, there was one economist just yesterday that came out and said that he thinks that we are headed for a recession, that the market is getting too frothy, that it's going to be like the tech boom of 1999, 2000, followed by the tech bust. This is economist David Rosenberg said, and you'll see here, right here in the gray, he says, the US economy is barreling toward a recession, as evidenced by the recent slowdown in economic growth and the rising inflation rate, and investors appear to be overly optimistic, just like 25 years ago. Now, I was in the market 25 years ago. I was a technology consultant in the late 90s, and I saw all of these companies boom. In fact, I had NVIDIA as a client and Advanced Micro Devices as a client, and they all boomed in 1999, 98, 2000, and then busted. The market was euphoric. We saw the same thing with crypto last few years, euphoric and then a bust. And what usually happens is during that euphoria, companies are grown out of that euphoria, and the good companies survive and become Google, and they become NVIDIA. NVIDIA was around back then. It was very small, and now it is one of the sixth largest company in the world because of the AI boom. So the economy is generally getting better. The labor market is really the linchpin of where the economy is going to go, whether the labor market is going to be tight or loose. It seems to be loosening up a little bit, which means the Fed may or may not raise rates. They're indicating that they're going to need to raise rates 2 times by the end of the year. And we saw just yesterday, 4 countries raised rates. The UK raised, Switzerland raised a little bit. UK raised 0.5 point, Switzerland 1/4 point, Turkey 6.5 points, and then there was one other country that raised, and that was here's the map here. Oh, Norway. Norway raised 0.5 point, trying to keep inflation down, get it down below 2%, which we're going in the right direction, but still have a long way to go. Now, in a piece a few days ago, I wrote about how several investors, large investors, Raoul Pal and Kathy Wood from ARK Invest, have said that the 2 sectors to invest in for the long run and intermediate future are tech stocks and Bitcoin. Bitcoin, because as the economies around the world have trouble like they've been having in the last couple of years, the more debt they have, which debt is at an all-time high, government debt is at an all-time high, corporate debt is at an all-time high, and consumer debt is at an all-time high. Credit card debt is at an all-time high. Student loan debt is at an all-time high, and it is all trending up. The U.S. total debt just passed $32 trillion. So the more that happens, the more people will want to flee toward an asset like gold and Bitcoin. And we've seen that happen most recently with the banking crisis in the U.S., where the banking crisis followed by the debt ceiling drama, that crypto or Bitcoin in particular, and Ethereum as well, the prices went up because more people were trying to get out of a system that was having a lot of trouble, that they saw as failing. We didn't know if the government was going to bail out the banks or what they were going to do with the debt ceiling, although most thought that it was going to get resolved, and it eventually did in both cases. But people fled the system, and the gold hit an all-time high, and Bitcoin hit a recent high. And so their theory is that as the system continues to take on more debt, that will be a great asset going forward. Tech is a little bit different. Tech is innovating. It's creating these products that are increasing productivity. So the more that they can increase productivity in a world that is laden with debt, that has high interest rates, the only thing that can get the world economies out of this current environment is productivity. And the tech companies are the ones that will deliver the productivity. And I should say, before we get really going, is that none of this is financial advice. Do your own research. I'm just providing some information here about possible investments, so you can make your own decisions. So you can see here where the money is going. Money is going. This was about 2 weeks ago. A lot of money going into Tesla, Nvidia, AMD, Amazon, and some Apple. So people are investing in tech companies because they see that that's where they can get the return. Now, one interesting note is whether Tesla is actually an AI company. So if you want to invest in AI, there are a couple of ways to do it. I'm going to link an article down below that talks about certain index funds that you can invest in that are specific to AI. You can invest in the general economy at the top level if you believe that AI will continue to drive and tech companies will continue to drive the markets. Then you can invest in an index fund, an S&P 500 fund like VTSAX or SPY. There are several index funds that buy the entire market. That's something that financial planners like I used to be continually recommend, is just dollar cost average into an index fund, buy something every paycheck through your 401k or your IRA or your brokerage account. Just buy something every time you get paid, or every couple of weeks, or every week. Some people do it every day. Just buy an index fund and forget about it. It's the easiest, simplest way to invest. Do it for the long run, and in general, it will go up as the market has gone up. Next level down is look for an ETF that is specific. It's specifically targeted to a sector, which is which is focused, for example, on artificial intelligence. You'll see here that this article in Forbes, data from Statista, and I'll link this down below, looking at the market for AI. It's expected to grow from a market of about $300 billion to almost $2 trillion by 2030. So that's not a lot of time. That's only about 6 years. I've read that some economists say that AI will drive 80% of the productivity gains. And then eventually, we're talking about AI, but eventually people will not really think of specific AI companies because everything will be driven by AI. It's really making its consumer debut this year, even though it's been around for a long time. It's now becoming much more functional, and every company will be using AI eventually. And the market for specific AI applications is expected to reach $2 trillion, $2 trillion by 2030. So there are a couple of ways you can buy an actively managed fund, or you can buy an ETF. And this article goes through some different funds that you can buy that are specific to AI. And I like the ones. I haven't done research on all of them, but a couple of things that stood out is some of them have a low expense ratio. You'll see here, let me make that a little larger. This one here has a 0.68, 0.94 expense ratio. Wisdom Tree is 0.4. Generally, an index fund will have a low expense ratio versus an actively managed fund. Like VTXAX, the expense ratio is 0.04. So this is a little bit higher. This is the expense you pay every year for holding that fund, because they're actively looking for investments. And you'll see the 3-year total return, of course, is pretty high because the market has done so well. So if you're looking for an investment in specific AI, but you want to go broad, you don't want to try to pick stocks because it's very difficult to pick stocks, then consider an actively managed fund or an ETF. And check out the link below. I'm not endorsing any of these funds. I haven't done research on any of these funds, but it could be a starting place for you to do your own research. And then more specifically, going down to the lowest level is individual companies. You can invest in NVIDIA or AMD, the companies that are at the forefront. Some analysts say NVIDIA is a little bit overvalued, but some like Cathie Wood and others say that AMD has a long way to go, and we're just at the beginning of this revolution with AI. So you dig into it and make your own judgment. One thing I want to bring up that's a little bit different is whether or not Tesla is an AI company. In fact, you can see here the performance of Tesla. It has even done so far this year, has done even better than AI stocks. In this graph, the AI basket considers NVIDIA, Amazon, C3.ai, Microsoft, and Alphabet. Tesla has done even better. And there are a few reasons why some people consider Tesla an AI stock. Of course, they've got the self-driving cars, but the software that drives the self-driving cars is really the value of Tesla. So they've got the cars, they've got the software, they've got Dojo, which is their supercomputer that collects all the data that they use to run the systems of software for the cars. And then something that isn't talked about a whole lot in regards to Tesla is the Tesla bot. The Tesla bot has been under development for about a year, and Elon Musk's idea is to have this Tesla bot that can be sold for less than $20,000, and plans to have it on the market in several years. And he said 8 months ago, I did a video about this, where he said that just because of the Tesla bot, he thinks that Tesla can be worth twice as much as Apple and twice as much as Saudi Aramco, which is, I believe, currently the highest valued company in the world, Saudi Aramco. He thinks it has such a huge potential because at that price point, $20,000, the majority of people in industrialized countries will be able to afford this robot that can help them around the house. It can run errands for them, that can do clean different things. And Tesla just posted a video a few days ago about the advances that it can do, how it can walk. It uses the same software run on the dojo that powers the cars, is going to be powering this bot. So that's an argument for Tesla actually being one of the best AI companies, because they already have a product. They've got the cars, they've got battery, a little bit of solar, and now they're coming out with the Tesla bot in the next couple of years, and they continue to innovate and continue to develop. They're taking that AI that runs the cars and applying it to other things, which could explode the market. So something to look into. So that's my overview of some different ideas to invest in the AI market. In the medium to long term, considering how great AI has done already this year. Remember to do your own research. Don't FOMO into anything just because it's hot. You're not going to miss out on much if you just wait a few months until things potentially cool down and we see if we're going to have a recession or not. I'm going to keep covering this every day in the daily, the morning download. You can get the link down below, or just go directly to the website, sign up for it. And I'd love to hear your thoughts. Are you investing in AI companies, or just going and investing in the index to make it simple? How are you taking advantage of the tech boom? Are you putting into your retirement fund? Is a fund money? Is it in your 401k? If you're already retired, I know a lot of people on this channel are already retired, people who watch me. Are you considering this for any of your retirement funds or retirement investments? I'd love to hear your thoughts. So comment down below. Let me know if you agree with what I've said, where the market is going with AI, or disagree, and what you are investing in. Thanks a lot, and I'll see you next time.